spoke to a new client today who he's 57, wants to get about a 70% return in his pension within the next 5 years, and was asking if it's possible. And I said, well, we've got to look at the data. Anything's possible. What's most probable? So we look at the data of historic returns of relatively safe, high quality, large companies which have had consistency of performance, because consistency would imply that's going to continue. But we also want to look at their current state, not just their historic state. Right now, last set of accounts, are they in line with what they've always been? Of course, none of that guarantees the future by any means whatsoever. Tomorrow we could all be dead, for instance, and the Earth could stop spinning around the sun for a start. There is no guarantee, but there is an element of, if this is what's happened and we look far back enough and there is a consistency to it, and we don't just buy one company, we've got 20, 25, maybe even up to 40 to make sure that all our money isn't based on one company pulling through, then we should be increasing our returns, our chances, our probabilities, our chances of getting those kind of returns. However, there is something else to consider. Where in all of that was the undervaluation of the company, the growth, the dividends, the income, all the other factors that might matter, cash flow statements, balance sheets, analyst reports, momentum of how well it's been doing, its trends, all of those factors. Well, the answer isn't to then throw your hands up in the air and say, look, nothing will ever work. We better give it to an expert. That's basically a false, what we might call a false dichotomy. It is not a choice between A and B. One of the choices is you educate and inform yourself slowly and do it. You know, one of the best ways I think to educate yourself, I do like Money Saving Expert. I trust them. I do like, if you Google Barclays and SIP, it's not because it's Barclays. You don't have to use their SIP. My point is they must have spent hundreds of thousands of pounds of making sure that their explanations were simple and easy to understand. Far more money than I ever could have spent on any website where I would have done it. Why would I refer you to mine when I could just say, well, just learn it from theirs? What I will refer you to mine on is the free resources, the tons of free resources that I've got, from videos to articles to books to portfolio reviews, all for free on alpeshpatel.com/links. Anyway, hopefully this was helpful. If it was, save it for later, share it with someone else, comment, like, promote it everywhere. Get a t-shirt printed with it on there. All right, thank you very much.